Welcome to Trade the Trend, a weekly video about where the stock market is going. This video is going to focus on the SP 500. I'm going to cover the ASX 200 as well as gold and uranium in a separate video. I'll leave a link for that in the description section below. I'm also going to have a look at an international market that points to what could be coming next for the stocks in general. So make sure you stick around for that. As always, this general commentary doesn't take your personal situation into account. With all of that said, let's jump over to our first chart. So I've got the S&P 500 up on the screen, and really there's plenty of interesting things to talk about going on in these markets at the moment. So I think over probably the last 4 or so weeks now, there's been a lot of concern that this selling was going to accelerate and turn into something quite a bit bigger, or maybe it still will. That is and has been the concern. I was saying last week that I think our base case should be that what we're experiencing now, I think, is a consolidation to the previous upward trend that we've had in the markets, and that it's not actually a major reversal. What's been interesting through the week is that we have had buying come in off this 100-day moving average. So I've got the 50-day moving average and the 100-day average. And the buying's come in quite nicely. We've had quite a good rebound in US stocks generally, and especially so in the S&P 500. And so far, I'd say this what we've seen so far over the last few weeks, it is very much proportional to what has occurred in previous months. So let's put the Fibonacci retracements on, and I'm going to use this low here from May, and then take that up to the recent high. And you can see that the rebounds come right off the 50-day, right off the 50% Fibonacci retracement, and of course that 100-day moving average. I think this still is going to need. I think it still needs time to play out, and possibly we're looking at one scenario is that we have another couple of months of consolidation as this market works off this. Well, this was a 14% rally in only a few months. That's a strong rally, so it does need time to work that off. And one possibility, which I actually mentioned this a few weeks ago, I think it might have been about 3 weeks ago, I suggested that maybe something like what we saw in around September, October, November 2020, maybe something like that could play out. So if this were, and of course it's not going to play out exactly like this, nothing ever mirrors completely a previous period, but if it were to do something like that, well, maybe we've already had the first leg down. Maybe this is the rebound we're currently having, which then could at some point give way to a retest down towards the lows from a week or two ago. So just something to keep in mind. Something to keep in mind as a possible pathway this market could move in. Basically, I'm looking for just putting in a box, maybe through to somewhere near the end of October, for a consolidation, maybe to form within this region. So again, it's just looking at a possibility. It's not a prediction of how the market will travel, what course it's going to take, because of course I don't know. Another interesting thing to have a look at is just to throw on an RSI. So let me just find my RSI. Here it is here. And this is another reason why I think we should be anticipating more consolidation. So let's just say the market was to quickly continue what it's done over the last couple of weeks and rally to a new high. What would occur then would be, I think we'd get a situation where the RSI wouldn't be able to make a new high. The RSI wouldn't get back to these previous high points from June, July. That would create divergence, which would be another reason for the market then to not be able to sustain and advance at this stage, and then pull back within this region. So that's one of the reasons why I don't think the market's going to regather steam quickly and charge off to any great heights from where it currently is, and why I think we're likely to probably see this pause develop more and probably more sideways, maybe more weakness before we can potentially look at an upturn in the maybe towards November. And so look, I want to stay with this trend until I've got good reason to do otherwise. At the moment, I just don't think there's enough evidence here to support that this is a major reversal and the market's heading significantly lower. I think it's, as I say, I think the base case is for consolidation. Just quickly jumping over to the Nasdaq, and very much a similar story there. Huge rally off these lows from January, and look, the Nasdaq's up something like, at its peak, was up something like 50%. And we all know that markets don't keep rising at that rate. At some point, those rallies have to be consolidated. That's what I think is going on now. I think we do need to see this consolidation. And I think, as just I was saying with the S&P 500, I think it's going to take time. I'm still holding positions in US equities. And look, that said, though, I'm not ready to buy this dip at this point. I want to keep watching how this price action plays out. And if my base case starts to sour, if the market does start to lose traction and does start to give ground, well, I've got my exit plan. My stop losses are basically my plan B. So nothing's taken for granted with these markets. We have to watch how the price action plays out. But at this point, as I say, I think it's too early to jump to the more bearish scenarios or conclusions that some people are thinking about. Now, if you're getting some value from this, please hit that like button. Please leave a short comment. Just, hey, thanks for the video. It just tells YouTube that you're watching and you're engaging, and YouTube shows other people, and that helps me heaps. So please, please do that. And now let's just jump over to the Russell, just quickly finishing up with, well, actually not finishing up because I've got one more thing after the Russell to show you. And I think the big question here with the Russell is, are we seeing a large basing formation take shape over the last 15 months? I think the Russell really is the key to the sustainability of this rally in the US markets generally. I think for a healthy stock market, you've got to have the small to mid cap stocks rallying as well. You can't have them just trading sideways whilst the Nasdaq charges upwards. You need this broad-based participation for a healthy bull market. Hasn't happened yet, but it could still be coming. This could be I think this has potential to be a large basing structure. At the moment, we find that the Russell's in the middle. Well, it's actually bounced off the middle of the range. We've got this support at around 1,820. The last week, we've seen it rebound off there, just getting back up towards where the 50-day moving average is. Look, it's still range bound. We don't have a great deal of direction here, but I think what we are looking for, we're looking for a breakout above this descending trend line, marking the top of the range, or if we look to the more classic horizontal resistance, we're looking at a region around 2,000. So they're the triggers to get a breakout to support the bullish case. And ultimately, though, I think it still takes time. It's going to take time for this market to consolidate before we can get those breakouts. Now, just lastly, I just want to have a quick look at a European index, so the Euro Stoxx 50. And I think this is another one which points to consolidation over the next at least the next couple of months. So what we've got a big resistance band coming in at around 4,000, just below 4,400, which has really capped the market since April. False break higher in July, market broke, wasn't able to go on with it, quickly fell back below. We now have a situation where the moving averages are starting to roll over, so the 50 and 100-day averages, and the price is really struggling to stay above those moving averages. So I think it's another case of where we've seen a really big rally. It's a market which is tied and needs to do some work before we can potentially look at more encouraging scenarios in some period in the future. But for now, it looks like I think it's pointing to consolidation. I think that flows through to what we're seeing in the US markets as well. So look, let's call that a wrap for this week. Thank you for joining me. Hopefully that's been interesting, and I look forward to coming back and talking to you next week. Till then, bye for now.